Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. Guys, we've got a lot of data to show you, but it's really important. One, we think we're going to pump. Two, then we're going to dump. We're going to dive into that in this video. So let's go.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. You know, we have chat room, we have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com, check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening.
Okay, Bob, we got some pretty interesting data, some really important data to navigate through the rest of the year. Why don't you take us through it?
Yeah, so first of all, let's just back up real quick too. We've kind of been following the 4-year presidential cycle script more than the general seasonality for SPX. And it's kind of scary how it's been like laid on. It said, hey, you know, I was expecting a March swoon and an April pump, and the data suggested that March would be okay and April would dump and May would be great. And it looks like we're on that train. And I just want to show some data points because I think people now are getting scared. The market was like down 6 days in a row. It looks like it's breaking support. Scare the children, you know, flipping stops. But there's data to suggest that it's always darkest before the dawn. And here's some of the dawn things. So if you want to throw the first slide up, Phil. And I just want to throw a shout out to Kyle, one of our members. He just has great data. I always asked if I could steal this stuff. He said no problem. So hey, Kyle, thanks for this. A couple other charts he threw out in the room too this weekend. But this is the blackout window, Phil. And we've been having a pretty persistent bid on buybacks. And so companies can't buy back in certain windows when their earnings are reporting. And we've now passed the peak. So you're going to start seeing companies starting to accelerate. More companies are going to be buying back shares. That's going to accelerate the buyback program coming into the end of the Q1 reporting season. So that's going to be a good guy for the market. The second chart I want to show you, this also came from Kyle, pretty cool chart. It just shows you after a 3-week decline in the market, what usually happens. And it's all we really can go on, right? You know, you rely on seasonality, you rely on buying channel bottoms, you rely on, you know, momentum crossovers, and you rely on previous fractals, right? And here's one that suggests that when you have a 3-week sell-off in the market's oversold, and we can get into whys and wherefores of how puts and calls influence that, but usually you get a snapback from there. Even if you analyze 29 to 32, there were some massive rallies on our way down to minus 88%. You know, so people need to understand that, you know, we call it don't short into the hole. I don't know how many times, Phil, on Friday, I had people ask me, should we be buying SARC here? Should we be buying SQQQ here? Should we be buying NVDS here? And our view is that no, you know, you buy when those are oversold, not when those are overbought. It's just a natural tendency for people to get caught late, you know, and I'm guilty of it too sometimes as well. You just get worried. But this shows you that, you know, greater than 80% chance that you're going to rally out for the next 4 to 6 weeks in the market after a sell-off like this. The next chart I want to show you is another reason why. This is the VIX. And the VIX is just basically a representation of the put and call activity, out of the money put and call activity in the stock market. And it gets represented by a volatility index number. And one thing I want to show people here, this is the VIX index for Friday. And just look at that pop over 20. And it basically was selling down almost the whole day, even though the market was falling, which suggests to me is that there's two ways you end up sell-off, right? You know, one is a kind of cataclysmic sell-off where people then that were protecting and hedging themselves with puts finally close their puts, they keep their shares. The other one is that they close their puts because they sold their shares. And I think we're in a situation now where people were like, okay, we are disposing of protection on Friday. And so my expectation is, I'm going to show you a chart here in a couple of minutes, that the expectation is that the storm has passed. And when volatility starts falling again, it's a representation that people are getting less worried or more bullish. The next chart I want to show you is the VIX 3-month, 1-month ratio. And this is a really interesting chart. And I encourage you guys, look at this ratio. And if you could tell every spring and every fall, Phil, we get an inversion here, or they call it the backwardation of the contracts, where the front month or the closest month to today, the volatility or the insurance goes up higher than out months. And that's unusual. Usually, the farther you're out into the future, the more uncertainty there is, so the more protection you want to put on. But there's a near-term event that causes people to buy insurance. It's almost like, the Weather Service is putting out a report that a hurricane is coming to your town, and you can dynamically buy insurance. And as soon as that hurricane curves away or goes past, you don't need the insurance anymore and you drop it. That's kind of how the VIX works. So you get this like immediate event that you're protecting yourself from, and then once it passes, it abates, it flips the model back to what's called a positive curve, and then that allows the traders then to take on more risk again. So if you look every year, March and October, March and September, April is more rare. October, you'll notice that you get this spike, and that's what we were calling for in March and say, hey, there's going to be probably some VIX event. They pushed it all the way into April this year, so that's abating now too. Look at that, the wick on there is coming back down again. I expect it to keep falling because the next chart I want to show you, this is the term structure of the volatility index. Okay, so when you go out in time, if that term structure has what's called a positive slope, basically it's climbing upwards over time, that's normal. And traders are able to manipulate that ratio to be able to take on more risk. So it looks like now that we passed this April option contract fill, is that we're kind of in a more normalized environment till we get to August. Okay. And looks like September going into the election, there's a lot of people bidding up insurance for that period of time right ahead of the election, which I think what I've been calling for is maybe an August top in the market. And this would be one of the things that could bring it about is you get the volatility index goes backwards again. That's bad news for the market. Now, obviously, this could change over time, but right now it's suggesting that a lot of people are hedging themselves into the election, and you're going to have probably a rough go of it after, I would think, the August options contract is completed into the November one. So sorry for the long-winded. I usually get you in earlier, Phil, but I kind of wanted to monologue this thing out, and I'd like to get your thoughts on it.
The only thing I'll add to this that I think it kind of goes along with at least the way I view how this market's going to play out in September. The more I was looking at the data, the more I think, we either top out into July, or July is like a local top pullback, and then you get a secondary high that could be like quote unquote divergent high maybe, where the oscillators aren't confirming the high, and that can carry on into September. So it kind of jives with this. Then from September to November, I think it's volatile. I think you could have a situation where you have another pullback and then you attempt to push up, but you don't quite reclaim those highs. And then after the election, because a lot of the incentives to prop this market up are gone politically and otherwise. So, and seasonally too, Q4 is a tough quarter going into December. So I would be very leery, especially if we've completed like the blow off move, right? If we're way up at 6,000 and we start seeing that macro job data really starting to crank up, and we're really looking for an acceleration on that, right? When the job numbers really start to crank up in terms of unemployment and jobless claims, it's more of a rate of change on that. That's really the trigger, and the yield curve goes and normalizes and starts to steepen. I think if you have those two things going into Q4 of this year, then I think that's basically your perfect storm for a fairly long recession, pullback bear market. And that's everything we've been talking about for several months comes to a head.
Yeah, and the only thing I'll add is that the jobless numbers looks like they're being manipulated now, the jobless claim number. They haven't changed in 3 months, and they're basically now being seasonalized, and so, they're probably worse than what people are saying. And so I think we're going to hold to it too. But short-term guys, look, we can macro ourselves to death here, but the traders are telling you they're positioning for some sort of rally. Could be a relief rally. It could be a new high. It doesn't really matter to any of us. Just don't be shorting into this. Looks like Israel and Iran did whatever game they were playing is they proved each other's point, I guess. Because, unless by tomorrow night something happens, we're going to probably see oil down and market up on Monday. And you're going to probably see a relief rally from no war. And the other thing I didn't put on this chart, folks, I couldn't find the data, but the liquidity drain from all the tax receipts that are coming in is going to be abating too. So you have a lot of good guys coming into this. The earnings have been coming in okay. The market's punishing the stocks, even though probably because of what's been happening, but the earnings are coming in okay. And I think what's going to happen here is that the analysts are going to probably be revising the next quarter higher. And I think you just have a lot of wind at your back here to what you said till July. My only caveat is something out of the blue, obviously. And number two is if the Fed decides to reduce interest rates, and that'd probably be the catalyst, that you have to pay attention to. But I don't think they will, Phil.
No, I think they have too much in the way of inflation. They've been very vocal lately, right? They've been coming out, a lot of the Fed speakers have been very hawkish about the fact that they don't feel like they're winning the battle. To kind of summarize everything that they've been saying the last few days with their different speaking engagements, they don't feel like they're winning the battle with inflation. So I just don't think that's a likely probability that we see any kind of rate cut, at least in this next meeting that's coming up. And I think it's going to be data dependent on any meetings going forward. We went from, I think, the market trying to price in 3 or 4 rate cuts this year to now just about 0. I think maybe 1 in the last meeting for the year, if that. But if Q4 comes around and things start, looking dire, make no mistake, they're going to flip on a dime and they'll cut as they see fit. So really it comes down to, I think, more about, you can guess at that, but really it's going to come down to, is the trigger going to be there in the numbers that they feel like the economy is needing more help than, say, inflation? I mean, if you're really looking at it, if the economy is going to take a turn, inflation is not going to be too much of an issue because you will get a deflationary cycle. And my thesis is they're kind of, without saying it, the Fed really is leaning on that happening. They'd be A-okay with a recession. Again, on average in our economy, we get it every 5 to 6 years. We're going on like 13, 14 years without one. So we're definitely due. But I think it actually helps the Fed's case in this situation, given the way the inflation is running so hot. And then in the near term, Bob, all I'll say on the stock market is that you're right. We're really oversold. This market is not used to being down this many days in a row. I think we were down almost 5% this week. That's also a fairly large weekly decline over the historical average. Usually in this situation, you're going to get a really vicious rally, and the leverage is so cranked up in this current market, you could easily be back up to the 50-day moving average, which is about 150 to 200 points higher than where we are now. That could all happen next week. So you have a rip-roaring rally back higher. I don't think we're totally out of the woods yet on that, but I think we really get out of the woods probably more towards May, and then you get that election seasonality push into July, and that's really, I think, where you're going to see some fireworks. But short term, we're due for a pop. It's probably going to rip off some faces, and then volatility for the next couple of weeks.
Yeah, we call that a crazy Ivan move, like Hunt for Red October. Sharp move down, sharp move up, V-bottom kind of a thing. Hey, on Monday, Phil, the halving has occurred, correct? I think since we've been producing this. So I think now we're in a new world here. And, I'd love to talk miners and Bitcoin and stuff like that on Monday if we can. Like to get your impressions on what typically happens, and then maybe what's different about this cycle that you might have some opinions or some insight on. So if Phil's cool with that, that's what we're going to talk about on Monday, unless something comes out of left field. And I think there's some tremendous opportunities in the crypto space. Just go around a lot of ways in which you can play it, and we're pretty excited about it. And I think there's going to be some legendary moves being made here. So stay tuned for that on Monday, and we'll give you our thoughts and what we're trading. So have a good rest of your weekend, guys. Check us out. I think you like what we do. I think we can help you make money. At least make sure you help you make less mistakes in trading. So with that, Phil, thank you for your time. I'll see you guys later.
Trade Genius.